Good morning. My name is Ryan Littlestone from forexflow.live. This week we're going to catch up on what we were speaking about last week to do with dollar yen and whether we're going to get a break in the dollar at all. The first chart I'm going to look at is the daily chart, and this is the one we looked at with a trend line that was showing the downtrend that's been in place since the most of last year. And we were looking to see whether we were going to get a break of it. The dollar had been looking pretty good, and indeed we did get a break of that line, which was around about the 104.20, 22 area. Now we got the break of that line, but what happened is we didn't follow through. And this was the big worry I had, where we had this theme in the market where the market was looking for inflation to be coming in, and whether the Fed would then be forced to tighten earlier or reduce policy earlier than expected. And so it really got pushed up there because we saw US yields rising. The 10-year yield got up into the 1.18%. That was a break from over 1%. And what happened was we got this break, it went up, it broke the line, but it couldn't sustain it. And then what happened was that since we've seen it fall the way back down. Now, after it broke this trend line that we're looking at here, and now we're back below it. If we switch to the daily cloud, we can see where the next resistance came in there, and that was from this chart that I showed last week also, which was the cloud formation. And we can see that we ran straight into the bottom of that cloud, and that itself held resistance as well. So two areas pretty close together in this 20-30 zone that held, or the first one broke, the second one held. It's pushed the price right back down again. Now what we need to look at is this the end of the move? Was it a one-off into the sort of new year trading, people positioning and jockeying around, or is this just a minor setback? So if we switch back to the first daily chart, we've got a couple of levels developing once again in this new year period. We had the move above the trend line, we say, then we had the dip back below. That stopped around 103.50, so that's given us a bit of a marker in the support area where we're going to look at what's happening next. So where we're seeing the price at the moment is sort of drifting between this 103.50 up to 104. It's finding a bit of a ceiling at 104, but again, we've got this trend line, and now we've got this the resistance shown around that 104.20. So we're building up these little levels around this area to see whether we're going to make a move. Now, if we get a push under 103.50, that's going to reduce this trade even further, or thoughts about this inflation trade, at least in the short term. And we could see another run below 103 down to the 102s. And if that happens, then that keeps this trend well in place, this downtrend that we've seen from the latter part of last year well in place. That could mean we do get a test of this big 100 area, which is something I highlighted a few weeks ago when we were down this way before. So there's a lot in the mix at the moment. Now, one of the things we were looking at last week, towards the end of the week, was the Fed Chairman Powell. He had a speech going on talking about inflation. And some of his comments were pretty much along the same lines as he always is, keeping things easy, keeping accommodative, keeping rates low for a long period. But what he did touch on was that if there's troublesome inflation, that's probably the only time they would look to hike, which sort of makes a mockery of the average inflation targeting that they've got in place, because the market now wants to know, well, where's your pain level? Is inflation at 2%, 2.5%, 3%, 4%? Where is the pain level that denotes troublesome inflation? And that's something that may be developing in the market later on down the line. If we see inflation pushing up, the market will start to ask the question, well, where is your pain threshold? If you're not going to move rates until inflation is averaging 2%, what happens if inflation goes to 4% and your average is 1.5%? And that's something that maybe not right now, but something for the future we need to keep an eye on, because again, that'll bring the inflation players back in, the inflation hawks back in, and they'll be pushing to see what the Fed does. So for the short term, for this week at least, we're going to watch this small range that we've got here, 103.50, 104, with the upside 104.20, 104.30. A break of either of those edges is going to bring the direction that's likely to carry on. So that's what we're looking for this week. And as always, I wish you all the best and I wish you good luck.